Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions, bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, September 13th. Great to have you here with us. I'm your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com is where you can find us. And we are going to be broadcasting live this week from Fargo, North Dakota at the Big Iron Farm Show coming up here Tuesday, Wednesday, and Thursday. If you're going to be at the show, we look forward to seeing you there on location. Well, we had a fairly quiet day in the grain and trade today. I'll say grains, livestock's a little different story, but let's dive into all of it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. Bryan, good afternoon to you, sir. We had a week off, you and I did, with Labor Day last week, and we got that big report on Friday, and we saw some decent moves Friday. We come back in here today, though, kind of just quiet, kind of an inside trading day, it felt like, throughout the grains today.
Yeah, hard to tell if today was a victory or kind of a disappointment. You had a big reversal in corn and fries. Had some negative news. Yield went up, ending stocks went up, prices went down, broke through the 200-day moving average. Looked pretty poor for a little bit and then came back and they actually had a nice finish. And you kind of look for that follow through. Well, it wasn't there today. So disappointing. Well, you're right on the eve of harvest here. In fact, harvest is beginning to get underway, and every day from this point onward, it'll be a little bit more and a little more. So the end user is still sitting on the sidelines, from we can tell, just waiting to see what it looks like, and too early to give you much results yet at this point or feedback from our customers. But it keeps coming back to us that in corn, probably look for a mixed yield. Some will be great. Others it struggled from the get-go, and it got timely rains or this or that. Other variables, Jesse, just to kind of throw it out there, we've heard probably more talk this year than I can recall about tar spot. So that can create some weaker stalk issues, and maybe ears don't fill properly, or you don't get the test weight. So we'll see if that's a factor this year in a bigger way, or if that's just isolated.
Well, you mentioned that, and obviously, we're going to be getting into harvest, like you alluded to. You couple that with what's felt like Friday, the trade kind of took the numbers and digested them as well. That wasn't as bad as it could have been. Still wasn't great, but it wasn't as bad as it could have been. Is that kind of your assessment of Friday's WASDE report there, Bryan?
I think that's spot on, because the market actually lost about 50 cents or 45 in that prior 2 weeks or week and a half prior to the report. So it was really almost a buy the rumor, or in this case, sell the rumor, buy the fact. The pre-report estimates were looking for higher yield. What was interesting to see, or what I think the market was kind of bracing for, was to see if there'd be any big changes on world numbers or demand numbers, things that were surprises. The big number that, or the big event that was in the September report, that 2 weeks prior, nobody expected it, was some type of acreage adjustment. And that did come out bigger. Maybe not as big as some of the others thought, but I think we were 400 or 600,000 acres in corn harvested acres more. Most seem to think that number could have been 800 or a million. So maybe a little victory there. Soybeans, on the other hand, good rain, spotty rains throughout August, I think probably helped turn the tide on yield from declining yield to maybe increasing, but still around that 50 bushel. Maybe 51. I can't see getting any bigger than that, unless beans are they're just hard to tell. I had farmers tell me, gosh, our beans were coming in 10 bushels an acre better than we thought, but it's still disappointing compared to what they could do. So
very, very true. Well, and Bryan, we look at this dynamic here going into this week, and there's other factors out there. We're still waiting to get ports open in the Gulf. We had a lot of rail shipments to Mexico here last week, and we saw some beans and wheat cargoes go out of the Pacific Northwest headed to China. That's not something we always see. And we think about soybean demand to China. There's not a lot of boats on the water from Brazil right now either. So it really feels like the trade maybe got through that report. We got reports at the end of the month, but it feels like we're going to be waiting to get some harvest numbers in here before we really have any movement in this trade. It almost, to me, my gut's kind of telling me it's looking like we're just going to be setting up in a range once again here throughout the grains. What do you think about that?
I think that's about dead on because it's very typical. The market just gets to a point where it can only take so many more guesses, and then you just got to get the results. And that's and the results are what we'll hear from feedback from producers and agronomists and such, and we'll get all that under our belt. What's kind of happened here in the last 2 months, if you think about this, we had an August report, we had a September report, we had the Pro Farmer Tour. We've sort of taken that range of potentials on yield and just kind of narrowed it down here. And now we have to see what it really looks like. Typically, you know, I put the needle more toward better than expected. I think people are generally cautious when they give out their thoughts, or when we talk to customers, they say, "Well, I think I've got this," and I think they're always hedging their bet a little bit. Nobody wants to count their chickens before their eggs are hatched. But when I look at big picture perspective, and we look at this year in totality, my goodness, some really wonderful conditions, and then some really suspect conditions and challenges. And we talked back in June when you're talking real high heat, and the plant's only so large that you're already affecting maybe ear size. All that comes out of the wash here in the next month.
Definitely. And also in the next month, we got to think about South American planting weather down there. That's going to start ramping up here very, very quickly as well. So really feels like the next couple of weeks going to be interesting to watch here as we move into the bulk of our fall and the market direction this fall. Wheat today, KC wheat bounced a little bit higher, but spring wheat, Chicago wheat were slightly mixed. Any thoughts on that wheat market separate from corn and beans today?
I think the hardwood winter wheat's finding some support here now after this pullback on just dry conditions and heat and planting, and then you've got a lot of milo that was planted this year. That the milo isn't harvested yet, so you're not going to get that winter wheat ground probably ready in time, in particularly those areas that will go to the milo. I'm talking western Kansas, maybe the Panhandle region, and elsewhere. So I think you're getting some support there. Reports really didn't offer anything startling or different. You've just got a pullback in wheat, the same as you did corn, beans. A lot of that Hurricane Ida got the ball rolling on that kind of risk off. I think a lot goes back to the jobless claims when that number was substantially down. We had 5 days in a row down the stock market. You're just seeing a lot of uneasiness, and this whole, for some of us, this whole sort of unsettling Afghan situation. And there's already news and talk of China, communicating with the Taliban. It's just kind of like something's lost there. And I don't know what it is, but that may have some, at least near term impact on the market, where people just kind of want to maybe stand aside. You got COVID still racing higher, and some real, let's call it controversial mandates, well intended maybe from the administration, but a lot of people kind of push back, kind of really don't like that sort of, you know, it's this or else kind of mentality. So I'm just thinking there's a lot of that. Wheat's got some firm footing, though, I think, on declining world supplies. But the world, I want to reiterate this, is the world isn't going to run out of wheat tomorrow. The key is probably, as you said, we've got to watch the southern hemisphere weather, watch the La Nina pattern, see what develops in the southern hemisphere, particularly in Argentina and Brazil. If that general dry pattern continues, we could start this all over. Remember last year we had delayed planting because of dry conditions.
Very, very true. Lastly, in grains, if I'm a producer, we're through the September WASDE report. We have more reports at the end of the month. We have harvest. Am I protecting any positions at this point here? What would be the play, for my marketing? I know right now puts are fairly inexpensive. I mean, am I looking at a put? What am I looking at here to maybe protect some downside risk?
Sure, I think you're looking at a put, and if you intend to store the corn, you're going to look at a put out to March or May, and buy the put against the carry in the market. That's your safety valve. That's always a good, you know, risk management tool. And I know a lot of times become disenchanted and say, well, I invested in that, but it didn't pay off. Well, remember, put's not supposed to necessarily pay off. It's there to pay off if things crater or if you get this spiral downward. I can't think of anything today that would give me that mindset, but just keep in mind that we are at such a high level in price compared to the last 7 years that if the managed money just doesn't like the feel of this and starts trading the trend and really blows out of longs or goes net short, that, Jesse, would be the big thing I would defend against. Certainly try and leave that top side open. We're in a real interesting transition year here where we're going to end this year with a much tighter supply scenario than when we started a year ago. And the need and necessity for big crops, ideal conditions, almost worldwide will be paramount. Right now, if you're an end user, you know that conveyor belt of crop is coming out of the U.S. You can afford to be patient when you see it coming, but that only lasts for so long, and then you'll likely see export activity really pick up. I think farmer selling really slows. You've had 5 months in a row to sell corn at 550 or higher, based on the board price on December. I don't think farmers will jump through hoops to sell it now. It's off of that mark. So what goes in the bin stays in the bin for a while.
Let's segue over to livestock, Brian, and cattle and hogs, both under pressure here on Monday. Cattle, we got that fire at that JBS plant in Grand Island, Nebraska, one of the top 10 processing plants in the U.S. in size. Is that what you think was the main culprit of our weakness in cattle today, or was that maybe the final straw compared to some of the other things we've seen, some of the other signals in the market?
Yeah, we've had a pretty rough. I mean, the last thing the market needed was this type of news because it's been a pretty rough last 6, 7 sessions, or 8, or 10, or whatever it is, where the market is just nose to dive. But this again goes back to just to show that we went from a contract high and bullish news that we flipped this thing over, and all of a sudden you peel off $10 really quick. I say that because I want, we just talked about puts in the corn market or things to defend. This is getting ugly really fast in the cattle, and it's really not expected. Now, you can argue that, hey, a lot of these deferred contracts were, one, too much premium, and two, needed a correction along the way. Well, what's the difference between a correction and a downturn? A downturn just means it might not come back. A correction means it's likely to come back. Deeply oversold. The Grand Island fire is just more fuel on the fire. The good news is the 200-day moving average held in the February live cattle contract today, and that's a good sign. And the market still in the deferred April contract would still be considered nothing more than a correction. But you've got COVID concerns, you've got logistical concerns, now you have a fire concern, now you got a chart concern. So these things, we're not out of the woods yet. I would like to think we've kind of leveled this thing back to where it makes sense. And what I mean by that, Jesse, is you look at these deferred months in particular, December, February, April, even June cattle of last year. On the way up, we were talking about defending these type of prices about where they're at or a little higher, and it just kept going up and up and up. You can see how long it takes to go down. It doesn't take very long. It goes up for 6 months. A lot of times you lose half it in 6 weeks. That's exactly what's been happening here in the cattle complex.
Over in hogs, Brian, seems like some technical pressure in that market as well. Some follow through from Friday's weakness. What's your thoughts on hogs?
Yeah, just a terrible looking technical chart. The market's taking out premium. It's worried about exports. I think it's worried about just the overall demand cycle, the jobs number. When you look at kind of the world economics, I think some of the plague in cattle and hogs have been just this idea that maybe that big buyer in China isn't going to be quite as big in the year ahead um, because of economic conditions and crack down on speculation and these other things that seem to be taking the wind out of the sails of bull markets. So the hogs, I've argued all along. I said that when you're looking at hogs outpacing live cattle prices and despite high corn prices, expect the availability of feed this fall, you're going to grow the herd. And I think that's exactly what we're going to find out is that we've grown the hog herd, growing the hog herd, and our daily slaughter numbers likely indicate that they continue to trend in a direction that I would be a little bit concerned with in general. That when you're looking at slowing demand based on economic conditions and increasing daily supply numbers, uh, those things, um, you know, I'm going to say concern me. Now they're not overwhelming, but they're
Mhm.
enough to just say we've got ample supply.
Brian, any other final thoughts you have for us here on this Monday? I think we covered pretty much all the big points today. Just again, another quiet day in grains and pressure we mentioned in livestock. But any other final thoughts you have for us?
Yeah, I do. I mean, this might not be related so much to the markets as in talking to some producers who, as they're prepping for harvest here, and I'm not saying go out and hoard parts, but have conversations with your dealers and wherever you get parts, because parts might be one of these things that are tough to come by. So if you know you're getting pretty thin on some specific parts, maybe start to inquire. Remember, everything's backed up in the supply chain, or at least it feels like it. And it should be a 1 or 2 day breakdown. You don't want it to be 1 or 2 weeks or months, just because there isn't supply available. So, and I think everybody knows I'm talking about those parts that have a tendency to wear out or break. Just have that spare on hand so you can keep rolling.
That's a good point. Well, and of course, we get into a busy harvest season. If producers need a little help with their marketing, they can reach out to you and the team there at Total Farm Marketing. And it's as simple as going to the website or giving you a phone call, isn't it, Brian?
It sure is, and a little bit old school. We just like to talk to people too. So go to the website, check us out. We got some awesome tools and resources there. But if you have a question or thoughts or disagreement, let us hear. Let's talk about it. Let's get out in the open. Let's figure it out. A lot of times our best ideas come out of sort of the people's kind of sort of challenging me, or I might challenge them, and they start thinking about it and go, well, wait a minute, what about this? So just those little things. A lot of times our best ideas come out of just little conversation that lead to thought-provoking ideas and real value in that conversation.
TotalFarmMarketing.com, 800-334-9779. Brian Doherty, appreciate the time on this Monday. Thank you, sir. We'll talk to you next week.
Thank you, Jesse. My pleasure. Honored to be here.
Brian Doherty with Total Farm Marketing, our guest today on Market Talk. Find us online, markettalkag.com. It's been the Monday, September 13th edition of the show. I'm Jesse Allen. Have a great afternoon.